This is where we review the opening price action of the futures market. We're going to talk about headlines coming out this week. It's going to be a big, big week in terms of economic data. Normally, when it's earnings season, I don't pay too much attention to economic data, but this week we get Q2 GDP. The big question is, do we go negative? It's going to have a huge, huge impact on interest rates as well as on the US dollar. The Pimp Mac Daddy of them all this week and the next few weeks, of course, is going to be earnings. Netflix coming out this week, Tesla coming out this week. I plan on doing earnings trades on those names. I'll talk about the setups on the chart patterns of Netflix and Tesla. I did a video about last quarter's Netflix trade. I posted it only a couple of hours ago. It's on YouTube. Check it out. If you're trading Strangles, you're going to want to check out that video to appreciate the volatility that could be associated with earnings on high beta names like Netflix and Tesla. Tesla's a very expensive stock. So let's get to it. We're going to talk about some headlines as well. But first off, we're going to say hello to people, and then we're going to go to the futures as everything begins to settle down. Seymour Rivers. Hello, Bob. I hope you are well. Same to you. Glad to be here in Good Sunday Night Futures. Thank you, sir, for being here and the participation as well. And the sound check is good. Thank you for that. Danny, good evening to you, pal. Thank you for being here. Larry, on board from Louisville. Awesome. Great to have you guys. Okay, let's talk about the futures action. We have the S&P 500. These are 30-minute charts, unless I say otherwise, 30-minute charts. And we are up over a quarter percentage point. So a bit of a follow-through relative to Friday. That means that we have new weekly higher highs. Or do we? No, because we closed down on the week. Let me check that out. No new weekly higher highs yet. Close, no cigar. I'm being a little bit too optimistic. So we're up over a quarter percentage point coming off the highs. So what I want to do here to see the health of this rally that we're seeing, let's just throw up an alert. Do we put in a new session higher high? Or do we fade? Good. We'll do that. Then we'll go to the weekly chart. And these are important to do. We want to know if we put in a new weekly higher high. That's confirmation, because what we have here is a chart of the S&P 500 weekly time frame, which is pretty bullish. All we need now is a breakout. And I went over this on Thursday night. I spoke about the reasons why I thought there would be a market rally. I said it could happen the next day, being Friday, which we're up, or sometime this coming week. We got the rally on Friday. The question is, how much volume is there behind it? How much institutional interest is there behind it? And that's the question that needs to be answered. And once we begin to see weekly higher highs, if they come, then you're going to get a bit of FOMO out of the institutions or hedge funds anyway. SPY. Okay. And we're good to go. Yoga Mac, welcome, my friend. Yeah, we're going over that now. We are up on the session. Looks like we're pulling back a little bit, though. Trader Isaac. Hey, my friend. Fist bump to you as well. Yeah, I have the volatility chart. I'm definitely going to go over that. Volatility broke down last week. Bam. Cena, right? Masa 80. I believe that is Cena. Let me know if my memory's good. Okay. Let's welcome aboard. Let's go back to the 30-minute chart. All right. So our alert is set. Yeah, what happened is that we got extended relative to the third standard deviation Bollinger Band. We're probably going to fill this gap, and that's okay. Back to the 30-minute chart. Let's take a look at the Russell 2000. The Russell 2000 had a good week last week, at least on Friday. I shouldn't say the entire week. All right, so the Russell has already filled the gap, 30-minute chart. We are up spot 1.8%. RSI going in the right direction. Money flow going in the right direction. Good stuff. The Dow filling the gap as well. Up on the session fractionally. Indicators look good. Where are my NASDAQs? My NASDAQs. NASDAQ 100. Looking really, really good here. NASDAQ 100 is up nearly a third of a percentage point. We were considerably higher, probably about a half point higher. So clearly we're going to want to know whether or not we get a new session higher high here. Now, of particular interest to me is the US dollar. The dollar is lower than the close of Friday, but it is up on the Sunday session. This is a 4-hour chart. Now, we want the dollar to weaken up here a bit. You can see that we're right at a support level. And this is going to influence commodities. It's going to influence gold, the gold mining stocks. All right, so we're good to go. We'll see if we break that support level. We'll get notified. Moving on to gold. This is a 4-hour chart. Gold is consolidating here, possibly putting in a higher low. Let's edit this. There we go. That's better. Okay. Quick look at silver. Silver. There we go. Silver moving up higher by about 1/3 of a percentage point. Good stuff. Let's stick with the commodity trade here a bit. Let's take a look at light sweet crude. From what I understand, off of Zero Hedge, I'll go over the article in a moment. The Saudis have agreed to pump more. I thought that they were at capacity. So apparently the oil markets are believing it. And you're seeing a gap down in oil prices. This is bullish for equities because if oil prices come down, then what we could see is the markets begin to price in a less aggressive Federal Reserve because the perception is that there is demand destruction. Now, natural gas ripped on Friday, and it's ripping again. We're up over 1.5% on the session. We're off the highs, but still a very strong chart here on nat gas. Let's drill down. 30-minute chart. We have a reversal candlestick. Let's see if we break down here. Ooh, you got some sellers moving in here. Okay. Copper. Not much going on here. Let's take a look at some wheat futures. Wheat coming off the lows, but really what we want to do here is take a look at a weekly chart. And I'll tell you, this is an extremely bearish chart because when you have a candlestick like this, and for those folks not familiar with technical analysis and candlestick patterns, I have a 5-part video tutorial below in the comments section. It's free, so take advantage of it. So when you get a bullish reversal bar like this, that's a bullish sign. Off of support, great stuff. This is the week before last, but last week, early on, we had a continuation breakout. But what happened by the end of business on Friday? Outside reversal bar, also known as a bearish engulfing. Very, very bearish stuff. I expect to see lower lows here. What you may get is a rally in an effort to try to recapture, let's call it 842, around there. It's probably going to fail. You're probably going to see sellers move in and dump wheat. Now, there's an analysis out showing that I think 44% of Ukrainian farmland, they're the largest wheat producers in Europe. I think besides Russia, 44% of their wheat or the crops are offline. The wheat producing fields are offline. Yet the price of wheat is beginning to tumble here. Now, that's a good sign, especially when you take into consideration the pressure that the farmers are coming under by the EU with this reduction in nitrogen, so you can't use fertilizer as much. They want to cut farmland. I'm going to go over all the articles. It's bizarre. It's absolutely bizarre what the EU is doing. And again, self-inflicted damage. And you know what? The government deserves whatever they get. I feel bad for the people. So that's wheat. We'll take a quick peek at, we'll just go over corn. We'll leave it at that. Since corn is certainly a staple, let's also take a look at a weekly chart. Yeah, not pretty. I mean, bullish key reversal bar the week prior to last, not as bearish of a candlestick, but when I see this, I take my crayon out, I do this. Because this is how bear flag setups form. So I suspect that if we do get any more of a rally here off of the recent lows, that rally will ultimately end up failing and moving lower. And again, this is all going to be bullish for equities. The more that food prices come in, that headline number, meaning the CPI data, that headline number comes in some because you're backing out food and energy. Excuse me, you're not backing out food and energy. Let me rephrase. The headline number includes food and energy. So if that headline number comes in weaker, it's politically uh, favorable for the Federal Reserve to be able to be a little bit less hawkish. Now, energy prices also affect the core CPI, which is what the Federal Reserve watches. But companies included in the core CPI are affected by rising fuel prices. Like I'm looking to have my driveway redone. So that's asphalt. What goes into asphalt? Well, oil. Oil goes into asphalt. So it's not backed out of the core number. It's part of the core number. So if asphalt prices come down and any associated product that uses oil comes down in price, well, that's going to help that core CPI number. Do I expect it to last? No, I don't. I think that we're going to get a pause here in inflation and then a ramp back up. So that's the take right now. I'm sticking to it. And let's go to some other comments that are here. Biden and the Saudis sitting in the tree. Yeah. Poor showing. Pretty bad. TZ Barton. Hello, sir. Franklin. Welcome, my friend. Yes, Danny, thank you. Smash the subscribe button. If you like these live streams, hit the notification bell and you'll get alerted as to when we go live. Subscribe to the channel. That'd be nice. Cool. I test my memory as I proceed into my wonder years. Ricasso Quixote. Love the name. Haven't watched in a while. Glad to be here. You're very welcome. Thank you for being here. Okay. Let's talk a little bit about volatility. That came up earlier. And volatility, as you might expect, is down slightly, but ever so slightly. The one thing I want to point out here on a weekly chart is this. Take note of this upper band of resistance in green. It's there for a reason. If we break out above it, that spells a lot of trouble for equities. So what I want to do is, let's set an alert here. Now, you may be wondering why I'm typing in possible breakout when it's above this line in green. Well, if it rallies through that green bar tomorrow, Tuesday, Wednesday, Thursday, doesn't mean it's going to close there by the end of business on Friday. So we actually just went positive on the VIX. Let's drill down here, see what's going on. We have a reversal bar. We were lower, as you might imagine, with the S&P 500 being lower. We are now positive on the session. Let's go back and take a quick peek at the S&Ps, see whether or not we have a positive convergence. We've seen that quite a bit lately, where the VIX has been up, S&Ps have been up, and it is. So we got to see who wins this tug of war here. But S&Ps are still up, along with the VIX. Now, I want to take a quick peek at yields. Wrong chart. So I think that the market can rally here more if we continue to see a 10-year yield down below a 3 handle. Once you get above a 3 handle, your high growth stocks, they have a very difficult time. That's your semi stocks, your technology stocks in general. They have a very difficult time rallying, and your ARK fund type stocks, they get annihilated because they have debt to roll over. And they have to show profits. And if they can't, if they have to roll over debt at a higher yield, well, that's a big problem. So they really need to show that they can have some profitability pretty soon. So yields below 3, that's a good space to be in. Let's see what the yields look like on a weekly view. They're holding a breakout here. I mean, this is not a bearish chart. You know, we saw a week down week, but we broke out here the week of July the 4th, and we have held that opening price. No lower low here. So what could impact GDP coming out this week is if I'm wrong and the Atlanta Federal Reserve is wrong and we don't get a negative print on GDP, you could quite very well see the 10-year yield shoot up higher. As a matter of fact, I'll bet a nickel that you'll see it shoot up higher. Let's get to the headlines. Okay, coming up this week, economic data-wise, Monday, Chicago Fed National Activity Index. That's a snoozer. Nobody really cares. Tuesday, people care about this. Case-Shiller National Home Price year over year. I'm going to go to an article in a moment. Home prices rolling over, not horribly. More listings coming onto the market. People trying to get out at the current prices. Consumer confidence coming out. Durable goods coming out on Wednesday. Big number. Looks like Powell's going to be out on Wednesday giving a press conference. Wonderful. Thursday. Okay, so Thursday we get GDP. Remember, the definition of recession is 2 back-to-back negative quarters of GDP. Q1, we've already had a negative quarter. Q2, the jury's out, but the Atlanta Federal Reserve has prepared us and said, get ready for a negative print. And not just by a little bit, a lot of bit. Friday, we get inflation data, PCE. That's the Federal Reserve's favorite inflation number. If that comes in, I'm seeing year over year here. I'm not seeing month over month get reported. I guess they'll do that anyway. Yeah, okay, here it is. Yeah, they're going to report month over month. Okay, good. So if you see a miss on PCE, month over month PCE come in a little bit, that'll be enough for equities to rally. Yields will pull back. The dollar may pull back as well. And that should be good for the markets. Now, what really is going to matter is what began last week, and that is earnings coming out this week. Tomorrow, IBM's chart is setting up like a monster. Let's go to TrendSpider really quick. You can see I was doing my research earlier. IBM's chart is really dynamite. We broke out on a monthly time frame last month. This month, we're pulling back. We're retesting some support levels. IBM looking really good on earnings. This may just be a buy. But I would wait until after earnings before I bought it. So we may do an options trade here on IBM. We'll be using a strangle. It's a simultaneous sale of a deep out of the money call and a deep out of the money put option. Tuesday, we get Netflix. I got my hand handed to me on Netflix last quarter. Cal-Maine Foods, which we own, that comes out. That's our little egg company, Lockheed Martin, Halliburton. Wednesday, Alcoa, Tesla. We'll probably be trading Tesla earnings. Thursday, Snap. You remember last quarter, Snap got annihilated. We'll see whether or not they bounce back. When I see Blackstone, I think in BlackRock. BlackRock, we already did our first earnings trade of the quarter. That was BlackRock from last week. We booked that was an options trade. We booked around a 90% profit. Obviously not on the equity, but on the option premium that we collected. Friday, Schlumberger, Amex. So we're going to be busy this week putting on options trades and trying to collect some premium. And then, of course, the following week is going to be a big, big week. You're going to have Google, which I believe splits this week. We're going to have Microsoft, a whole bunch of names coming out next week that are going to be dynamite to trade on earnings. Let's talk about valuations of the market. The valuation of the market is the lowest that I've seen in quite some time. We are firmly down in a 20 handle on the Shiller PE ratio. Is that enough for us to say that the bottom is in? I'm sorry, I'm not that type of guy. I believe in VIX blow off tops. And I think that we need to, as Michael Burry has suggested, we need to see a 16 handle on the S&P 500 PE ratio before we could say it's safe to go back in the water. That brings the S&P 500 down to around 1,800. So it's a long ways away. Now, I get no joy out of saying that because, frankly, at some point in time, volume is going to come back, and it's going to come back hard with institutional distribution. I don't like being in undefined risk trades, meaning short premium in that type of environment. So I'm going to have to rein in my risk or put on different strategies. So PE ratio is coming in, but still elevated, as is also acknowledged by the Buffett indicator. Now, they're stating that it's fairly valued, but you could see that relative to the historic norm, historical trend, we are still well beyond historical trend by about 34%. So while they're saying that it's fairly valued, I would not go by that headline phrase. I would look at the deep dive of historical support levels of where stocks tend to bounce. And again, it's a lot lower than here by about 34%. So I get no joy out of saying it. We're going over the history, and that's what we do here. And that's our analysis. We're going to stick to it. So while we may get a rally here, it's probably going to be short-lived. So be careful. All right. So I wanted to talk a little bit about non-farm payrolls, which came out a few weeks ago for June. And they came out at 372,000 jobs. And I had this brought up to me a couple of times by people that were citing positive economic data. And I said, it doesn't make sense, your argument that this is positive, because we had a huge beat on payrolls and you had an unemployment rate which was unchanged. So what I did is I went to the labor force participation rate, and somebody's got to riddle me this. Somebody's got to put this square peg into this round hole. How is it that the labor force participation rate, meaning we have less people in the job market, they're leaving the job market, yet we had a beat on non-farm payrolls of the expectation was 250,000. The actual was 372,000. So that's 122,000 additional jobs. Yet the labor force participation rate is coming in. The way I read that is that what you have are full-time employees that are taking on another full-time job. And they need to do that because inflation is going through the roof. So that's my interpretation of this. Now, from a quality of life perspective, would you really want to carry two full-time jobs? I think not. So while people are employed, they are working their butts off, family-friendly show, to just maintain the lifestyle that they become accustomed to in these inflationary times. Tom Liu, Gold there is a chance, 1660. It's possible. It's possible. But that doesn't change Millman's long-term outlook that gold is heading higher towards year's end. So I think that what the thing with gold is this. Everything was set for gold to make new higher highs this year. And we came close. Only one thing happened. That was Ukraine. And the Ukrainian crisis caused the euro to drop like a rock. And it's going to remain down there. I'm going to go over some articles in a moment as to why it's going to remain weak for a while. But what does that do to the US dollar? It sends it skyrocketing higher. And in fact, on a weekly time frame last week, while the dollar pulled off of its highs, it broke out. New 52-week highs on the week last week. So look no further than the Europeans being the proximate cause of the dollar's strength. Now, I'm optimistic on this front in that the Germans, the Nord Stream 2 has been canceled. That's a $10 billion pipeline project. That will not be put online just yet. Nord Stream 1, which is the pipeline from Russia into Germany, is offline. The Russians cut off their supplies back, I think, on June 17th for a 10-day maintenance period, and they have yet to come back online. So the Germans need to prepare for a very, very cold winter. So I'm going to go to some articles in a moment. I don't want to front run myself here, but I wanted to touch base on this great headline number, right? But in reality, you don't have more people coming into the workforce that are going to be paying taxes and being productive members of society. You have more people carrying multiple jobs, and their production, if anything, is probably going to get reduced because they're exhausted. Housing prices. I mentioned this earlier. So what we're going to talk about here is I don't want to talk about, most people on this live stream will probably own a home. So nobody wants to hear that their home prices are going down. So I'm not trying to bum people out. What I'm trying to point out is that inflation is beginning to melt down a bit, slow down a bit. Still high. It's still going to be going high next year, the year after. I don't expect 2% inflation anytime soon. But it's good to see that sellers' asking prices for homes came down 3% in May as the share of homes with price drops hit another high. So sellers, it's starting to shift from slightly from a seller's market to a buyer's market. It's going to take a while to get fully there. Active listings, and this is important. So it's always a law of supply and demand, right? Active listings, meaning the number of homes listed for sale at any point during the period, rose 1.3% year over year. That's the largest increase since August of 2019. Here you can see 2022, we're now rallying up and through 2021's homes listed for sale. That's good stuff. Other good news. Container spot shipping rates are falling. I'm going to stop it there. It's good news. Let's go into the new week with good news. Oil prices, I mentioned this earlier. We're seeing oil prices drop this evening a little bit. We don't know if they're going to reverse. Nat gas is still pumping up higher. But Biden was over in Saudi Arabia. Saudis announced increase in oil production. They will increase oil production by 13 million barrels per day. Not insignificant. Here's the thing. They will have no other capacity. I didn't mean to do that. After that 13 million barrel increase. So you would think that they would think about bringing production online here in the United States. That's not going to happen. But in any event, what we're seeing on West Texas Intermediate crude, this is the best crude out there. So on a weekly chart, you can see that we are breaking down. We did bounce off of the 50-period moving average on a weekly time frame. The double top is in. We did have an intra-week lower low. We did not close there. Therefore, it doesn't count. We need to see it close below 98.20 by the end of business on Friday, this week, next week, the following week, whenever, to get a confirmation breakdown on the price of oil. Till that happens, the path of least resistance on oil remains up. Hi, Bob. The market is still, yeah, it's very confused. No doubt about it. For a multitude of reasons, it's confused. I think for one of the main reasons is the lack of logic coming out of Washington and the Eurozone. Astrologers predict that Ukraine conflict will end in August. I hope so. Strange as hyperinflation is here and gold is punished as well. So you can, if you go back to a chart of the 10-year yield, gold, and the dollar versus CPI. I think I have it. I don't want to spend too much time trying to find it. If you go back to that time frame, you'll see that while CPI was going up higher, the dollar was going lower, gold was going higher along with yields because Volcker was pumping up interest rates. So for those young people out there, Paul Volcker was the Federal Reserve chairman at that point in time. So you need the break in the dollar. The dollar has to break. Now, what's going to cause that break? At some point in time, the Federal Reserve is going to need to go back to the, come on, what's going on here? There we go. They're going to have to go back to the well and ramp up the printing presses yet again as the economy begins to melt down. They'll probably take the pullback in inflation and use that as an opportunity to adjust their policy. And for those folks that are out there that are adamant that the Federal Reserve is serious about reducing their balance sheet and fighting inflation, I have a bridge to sell you in Brooklyn, because they've raised interest rates 100 basis points over the past year, while inflation is now, if you use the old CPI method of calculating inflation, it's above 15%. 1%. They need to fight inflation seriously. They need to get the Fed funds rate above the rate of inflation, but they can't do it. And what did they do last week? Remember, on Thursday Night Stock Charts Live, when we were live, this chart was not updated. I could not tell you if they had increased or reduced their balance sheet last week. They finally updated it. And what did they do? They increased their bond buying last week. They were supposed to see a decline of over $30 billion in the month of June. It came down a couple of $1 billion. In August, they're supposed to ramp up the reduction of their balance sheet by about $60 billion per month. They haven't even met the first target yet. And this was supposed to start months ago. So, folks, I don't know how to put lipstick on this pig. This is bad. And if you want to know why equities probably rallied on Friday, all they needed to do is look at the Fed's balance sheet and say, okay, gotcha. We're good with the Fed. So this is a signal to the market. Have no doubt about it. You take a look at this versus what they've said. And this is why I always say, don't listen to what they say, watch what they do. And as Bernanke used to say, or has said, 90% of what the Federal Reserve does is talk. 10% is action. Moving on. Okay, so the Italian government is falling apart at the seams, literally. Dutch dairy farmer, this is an individual, faces having to cull 95% of his cows based upon a Dutch nitrogen science, or an opinion about nitrogen that has been debunked by Dutch scientists. They're questioning whether or not this is all truthful about these studies that these globalists, these green agenda people are trying to put forward. There's no basis in fact. According to NOAA, NOAA, our global change in temperature over the past century has changed by about 1 degree. 1 degree. And these guys want to call the actual number across the board for all ranchers or cattle people over in Europe is about 30%. They want to kill 30% of all the protein, milk producing cattle across the EU. This is man-made destruction. This is not weather doing it to us. This is the EU doing it to themselves. More damage is being done. We are not slaves, and this is exactly what they're trying to do. This is the World Economic Forum in action. Farmers in Italy, Spain, and Poland joined Dutch protests. The reason why I'm talking about this is that this is why you're seeing the US dollar rip through the ceiling. One of the main reasons anyway. Who wants to own euros? Germany. I mentioned this earlier. I'm not going to go over it again. This has to do with the Nord Stream pipelines. We're facing the biggest crisis the country has ever had. Who caused it? Who caused it? Germany caused it. The EU caused it. They caused it. Don't blame the Russians. All they had to do. Hey, Zelensky, before the war, Zelensky, you got Russian tanks mounting on your border. Go out and say you are neutral. You will not be joining NATO and avoid this war. They wanted it, and they got it. So, President of Germany, German Employers Association warns of historic crisis over Russian gas cut. Don't blame the Russians. At the same time, I mean, you can't make this stuff up. It's too stupid to be stupid. France cuts nuclear power generation amid record-breaking heat wave. This is their main source of energy. And this article here has to do with hydrogen fuel, but what I really liked it, now they're going to try to make hydrogen fuel a thing. And this is what I mentioned earlier. I believe I read it here. Yeah, here. Oh, it was 1 degree Celsius, not Fahrenheit, 1 degree Celsius. No zone temperature data and the mere 1 degree Celsius rise in world temps in the past century. God forbid we look at facts. I'll share this out with you folks. Let me throw that in the chat box. Read it at your leisure. Now, going back to this article for a moment, I just wanted to highlight this one blurb here because it just sums it up so nicely. It appears that the EU is about to be humbled, and they are going to have to relearn the nature of priorities. The biggest priority of all is survival. And almost no one in the population is going to care about carbon emissions or hydrogen power research in the midst of an energy crisis in the dead of winter. I think that sums it up really nicely. Let's do some chart requests. First, let's go to comments. The normies don't see it yet. World Economic Forum is a corrupt cabal. Salty would recommend wood shepherds, no doubt about it. Salty is from the Salty Cracker. Folks, you should check him out, thesaltmustflow.com. Awesome guy. And an awesome, awesome community. If you have your time for chart requests, maybe RNG, sure. 6:45. We have time. I want to go over Tesla, RNG. I got to go to the members area. It would be nice if I did that. See who requested what there. CCRN for Larry. Dominic. Okay. CCRN. XAUMF, that is gold money. Next 60 days. Okay. We'll talk about that. Tesla. Netflix. LABU. LABU, I like. All right. So for disclosure purposes, Netflix we own. I had expected it to rally by now. I really didn't want to own it in through earnings, and I may just sell it or at least buy a put to do something to protect it. Gold money we own, LABU we own. Yodi, would it be a good idea to buy NVIDIA, seeing how Pelosi and her crooks are going to push a chips bill? Yeah, I read about that. That was I didn't want to bring it up tonight because I don't want to make it political. I'm going to see if I can find that article. Yep, here it is. I'll share this out. We'll go over SPY. Okay, let's get to it. To the question, NVIDIA, I think NVIDIA's chart is setting up nicely. As a matter of fact, let's go over NVIDIA chart. Love NVIDIA. Let's do it. Folks, we're going to be using TrendSpider, automated technical analysis, automated trend lines, seasonality charts, scanners, back testing, a lot of stuff. I can't go through it all. Great application. If you're mobile, you get all the alerts to your phone. Everything comes to your phone. So awesome product, 35% discount code below. Take advantage of it. TrendSpider. That's my pitch. All right. So IBM is looking so good. So good. Let's bring up Tesla. So we had an options trade on Tesla last week that expired worthless. We made money on that. Good trade. They report earnings this week. The thing about Tesla is this, and this is what worries me and why I'm going to be very, very small with the trade, is that when you take a look at the PE on Tesla, they're at a 79 PE, right? So to put that into context, Netflix last quarter had a PE of 34%, and it dropped 38% post earnings, and it's down 78%, 77% on the year. So just be careful here on earnings trades with Tesla. I'm going to try to move out as far to a 3 standard deviation move in terms of strike price as possible. And I'm probably only going to trade one contract because I just don't want to get caught up in some whatever happened last quarter with Netflix was just a disaster area, and it was bad. It was really, really bad. It was not a good trade. So I won't want to go through that experience again. So as for Netflix going into the new earnings period, it only has a PE of 17 versus 34 for the last quarter. But that 34, you still had a stock that dropped 38%, and you still have, if they report poor earnings, this could jump back up to a 25 handle for all I know. So we want to be very careful, very deliberate. It may look cheap right now. It may not look cheap the day after earnings. That's my point. So we want to be very, very conservative, especially in this market environment. So on the month so far, Tesla looking good. Holding support, 626.55, critical support level. Next support level below that, you're going to see a 5 handle, low 5 handle, 528 to be specific. Weekly chart. We continue to, it looks like we're probably going to move up higher this week. Yeah. Nice multi-week consolidation. Daily view. Looking the bomb. Looking really, really good here. Very tight Bollinger Bands. Very nice chart. Tesla, bullish. But remember, they're reporting earnings this coming week. So what looks bullish now, this time next week, it may not look so bullish. What was that other one? RNG. Where's that post? RNG. Yeah, RNG. Let's go over that. Ring Central. The monthly chart, we're nearing some support at around 43, 44 bucks a share. I don't like this chart. The daily chart's looking good. If you're going to buy this thing, I would use a stop right below the week, the lows of the week of, or the day of the 17th of July, I should say, last Thursday. That low was 47.56. If it breaks that support level, it's going to go down to that probably a 43.50, 44 handle. So not loving this setup here. Tight stops. You can buy it, but tight stops. What else do we have? CCRN, Once Country Healthcare. Really nice breakout on a daily time frame. Really, really, really nice. The monthly chart is looking awesome. We broke out last month, retest this month, follow through. We're going higher. It looks like we want to go higher. And right up here, you can see a price target in this about $35.50 per share. Weekly chart. The only thing I don't like about the weekly chart is that we're leaning into the 3rd standard deviation Bollinger Band. Other than that, this is a good-looking chart. Volume is strong. The path of least resistance is up. You do have some overhead supply back here. It would be good to get a week or two of sideways consolidation, work off that overhead supply, and then break out higher. I think this chart's going up higher. It's a very, very nice chart. bullish. XAUMF. All right, so can't type tonight. XAUMF. All right, gold money. This is a Canadian bank. We own it. And there's a very, very high correlation between gold money and gold. So as goes gold money, in all probability, gold is going in the same direction. Now, the chart I happen to like quite a bit. The daily chart, not so much. Friday was not a good day, but we broke out on the month. We broke out last month. Might we retest this lower band at around 112, which is the lower band of this volume shove? 115? Sure. And that would be a good thing. So I like gold money, but you need to keep an eye on the US dollar. If the US dollar remains strong, it means pressure on gold, and that's just the way it is. And once this thing gets going in the right direction, I think you have a lot more upside here, especially as you see these BRIC countries that are forming their own alliances. And if they come out with a currency that is backed by a commodity basket or gold, a mixture of both, you're going to see gold rip through the ceiling. So, and the gold money will follow, but that's long off from now. So over the next 60 days, I think that was the question that was asked. I think in 60 days, it's going to be higher. How much higher? Not quite sure, because the dollar is still very strong. If the dollar weren't so strong, I would give you a lot more of a firm answer. But we have broken out in a monthly time frame, but we can consolidate just like we did back here for a number of months. I predict, though, that we will not be lower than, let's call it 113 per share. I think we hold these levels. Weekly chart. Reversal week last week. MACD went positive. We are in, folks, this is the automated trend lines. I did not draw these. This is the algorithm. Click of a button. We're right at support. We have two resistance levels immediately above. We're in a trading range. How long it lasts, I'm not quite sure. LABU. Now, LABU is looking really good. We had MACD. Actually, no, it wasn't MACD. MACD went positive a while ago. Where are my Stokes? Here we go. Stokes had gone positive, rolled over, higher lows, and that's when we were putting on a trade on LABU. LABU looks like it's ready to rock and roll here. Even though it's been up for these past couple of weeks, it's still in a consolidation range. I think that we're going to probably press up higher here in the coming days and weeks. Volume has been good. Last week you saw down volume move in a little bit hotter, but up volume has been very strong. Let's go to a daily chart. And this would be one that's good if you want to sell puts. You can see using the automated trend lines. Again, click of a button. There you go. There's your support. There's your resistance. Actually, two resistance levels above. We reversed off the lows of the session on Friday. So while it was a down day, as I always like to say, all down days are not made equal. So if we had closed at this lower band of support or below it, I would have said, bad day, avoid. But the fact that we rallied back and we closed just off the highs of the day and just barely lower on the day, it makes me feel a little bit more confident. What I would do here is take out my crayon and say, okay, if I wanted to buy more, let's buy on a breakout. And that breakout would put us at about 950 on a closing basis. And I would be happy with buying more shares there, or just simply selling 850. What do we close? Did we close with a 9 handle? Yeah, we closed with a 9 handle. Oh, no, we didn't. We closed with an 8 handle. So I would look at the 8 to 850 puts to sell if you want to average down your basis cost. and if you want those shares put to you. So LEBU looking very, very good longer term. MACD and Stokes going in the right direction. Netflix. Now, Netflix, again, coming out with earnings this week. The consolidation here is very good. And in fact, I'm going to go to the weekly chart first. A very strong consolidation here. And this is why we bought the shares of Netflix. I thought we would have had a rally by now, but it didn't happen. I really don't want to be long the stock without some protection going into earnings. So it looks good on a weekly time frame. Stokes of like a coiled spring. Daily view. Now on a daily view, here using the automated trend lines, pop. We broke out on Friday. So really, really good price action here on Netflix. The only fly in the ointment is, of course, earnings. Extreme. It trades like a hyper mid cap during earnings. So just because it's an S&P 500 stock, don't get lured into a false sense of security. SPY. So I was pretty bullish on Thursday night, and I gave my reasons for why. Now, what we did on Friday is we moved up higher. We broke out on a daily time frame, but we also hit resistance. So the number to watch on SPY is 387.71. That's where resistance is. That's where we need to get above. Let's create an alert here. You know what? I'm going to go to the weekly chart and do that. Okay. SPY. Now, Stokes are like a coiled spring. They want to hook back up. We are in a triangle formation. Your upper band in green, your lower band in green. It was a down week, but we rallied off the lows of the week. We did put it in a new weekly lower low, but that's okay. That could be our higher low that we're looking for. So the S&Ps are looking good. No breakout yet, so I can't get too excited about it. And volume has not been awesome. Higher lows on a daily chart. We broke out on Thursday, continuation move on Friday. We have resistance immediately above, as noted by the automated trend lines. Would I be a buyer on Monday morning? No, because we'd be buying into resistance. What I would look to do, if I were looking to buy on a pullback, I would go down here to this volume shelf and where we found support on the 12th of July. And put my alert there. Jesus, Bob. New keyboard. I did not want to put that there. That's the wrong. I wanted to put it here. Sorry about that. Take a little bit of sensitivity off here. That'll fire off way too quick. Get notified on a 10-minute bar. And we're good to go. NVIDIA, really good week last week. And in fact, NVIDIA broke out. Let's go to the weekly chart. We reversed off the lower band of support. They don't report earnings for a few weeks. I think they report in August, I believe. So this is one that's good for a trade. A bullish reversal bar, 2 sequential bullish reversal bars. Daily chart. You could see using the automated trend lines. I did not draw these lines. The algorithm did. We broke out last week. Stokes are hooking up. Exactly what you want to see. NVIDIA looking good. GOEV for Tom Liu. Did they report some news last week? I'm getting that vibe. A nice breakout. It held support here. This is a tough one. I'll put it to you this way. If you're bullish on the stock and you're going to promise to put a stop loss right in the lows of Friday, then you can buy the stock. Otherwise, what I would do with this one, because this to me, I get the feel of a short covering rally, which is finite. I would wait for a pullback to the weekly breakout point so that we can get a retest of what was resistance should now be support. Stokes are hooking up. It's not a bad looking chart. The weekly chart looks good. But I'm just getting that vibe of a short covering rally. And again, that makes me nervous about the longer term. RNG should be profitable by now. No idea why not. Okay. In terms of XAUMF is good. WPM has the best profit margin. Okay. Franklin, have an awesome trading week, my friend. I'll talk to you tomorrow. The trick is the GOV after getting 14. I'm not sure what they even do. Oh, electrical vehicles? Oh, gotcha. Now I understand. Okay. All right. So what else do we have? Yeah, Google, I believe they report tomorrow. Or not report. They split tomorrow. Keep up the good work. Salty Homage is Legion. Yes, they are Legion. Awesome. Goog. See what they look like. Nah, not much happening here. Not much happening at all. No rush to do anything. All right, folks. With that, everybody, thank you for being here. Smash the subscribe button. Hit the notification bell so you get notified when we go live. For those that want my free 5-part video tutorial on my top 5 favorite candlestick patterns, use the link below. I spoke a lot tonight about strangles, what they are. I also have a video below if you want to watch the demonstration. And I posted 2 videos tonight, this weekend, I should say. One, my 5 top stocks for the new trading week. 2, my Netflix trade from last quarter. I actually do a replay of the off of Thinkorswim. I'm able to basically backtest that or replay that trading session from the 19th into the 20th and the damage that was done. So that way you get some appreciation of how much damage can be done to a stock when they really disappoint the street. So it keeps you humble. Take a look at it, and everyone else, have a profitable trading week. Enjoy your Sunday night. Be well.